Hey, it's Jeff Garber, mortgage expert. This is your mortgage interest rate update for the week of April 18th, 2022. And if you want to know what PMI is, stick around. I'm going to share that with you as well at the end. I get that question a lot. So here we go. So mortgage rates live in the bond market. They come from mortgage bonds or mortgage-backed securities, which trade each day, Monday through Friday. And all you really need to know is red is a bad day, green is a good day. But more importantly, as bonds go down in price, you see me drawing this line here showing a consistent decline in bond prices. Well, rates go opposite direction. So as bond prices go down, rates go up. Now you see a couple green candlesticks in here, meaning we're trying to get a footing and maybe get a little bit of rally and have rates come down. But every single time it's been a head fake and the bonds have just continued on their downward trajectory here. So you can see we head faked here. So we tried here, we tried here. You tried here. You can clearly see the bond market trying to get a couple rallies in, but just isn't taken right now. Main reason why rates are going up is because of inflation. Inflation is the kryptonite to the bond market and kryptonite to mortgage bonds. So as inflation rises or perceives to rise, mortgage rates typically will follow up with that. And we now look for the Federal Reserve to help get in front of inflation, because if and when they can get in front of inflation, mortgage rates typically will come down right along with inflation. So again, from last week to this week, same story. Inflation, Russia, Ukraine, and the Fed. That's the three-headed monster right now that's causing rates to continue to rise. We are into the fives right now, and as a disclaimer, if you want an official rate quote, you need to speak to a qualified mortgage professional to get that. We will report back to you next week with any changes, but I wanted to briefly touch on what PMI is, because we get a lot of questions on that. So PMI stands for private mortgage insurance, and you need to get PMI when you put less than 20% down on your mortgage. And the reason why is there's a bit of a risk to the lender when you put less down, because if they have to foreclose and come take the property back, it may be harder for them to do that. Therefore, they need an insurance policy, which we pay, and that's called private mortgage insurance. Now, PMI is not the enemy that it used to be. There are a lot of companies now that offer PMI, so that came into the marketplace, and that's creating competition. And whenever competition is created, rates come down. And the second thing is PMI is also risk-based on a conventional loan, meaning you could run individual clients through and get a PMI quote and get different numbers, and it looks at their credit and the quality of the loan. So not everybody gets the same private mortgage insurance quote. So if you have to put less than 20% down, which is not a bad thing, we can run PMI quotes with 6, 7, 8 different PMI companies. And again, because there's so many companies out there, the rates are competitive because they're all fighting to be the best and get the lowest rate. So it doesn't seem to be as high as it used to be. So again, if you have to get PMI, it's not usually the end of the world. So you want to make sure you look into that. It might not be as high as you think, and it might make sense, especially if you don't have the money to put 20% down. Don't let that stop you from trying to get a home. All right, if you have any questions, let me know. Comments below. Reach out. Be happy to speak with you, and I will be in touch next week. We'll see what happens to mortgage rates. Hopefully we'll have some good news. Take care.